Hi guys, welcome to day 4 of the one-on-one 0 to Pro training with D, and it's been nothing short of interesting if you've been following. And I just want you guys to understand that we've been away for some time. Doesn't mean we ended this program. It means we just went ahead to just take a break, and now we are back, and then there will be no breaks again. Will there be any break? There won't be any break. All right guys, so today class will be very interesting because we'll be talking about understanding the bias for a week. So every trading week comes with its own bias, and then understanding where you want to take that entry from, or where you want to sell or buy from, or why you want to sell from this point or sell from this point is very vital information you need so well that can really help you change the trading game for you. So if you're a beginner or you're an investor looking to position yourself on the charts with zero knowledge of how the chart works, you need to really pay attention to this video. If only this is the video you watch during this program, it's going to change the game for you. So without any further ado, let's just dive straight into the chart. So I welcome everyone again to today's training. It's been nothing short of interesting, yeah. So let's go straight into Alright guys, so this is very simple. So all we're going to do is we're going to go to GBP USD, guys. I'll explain this later. Let's go to GBP USD. GBP USD is a pair known to be as Great British Pounds versus the United States dollar, as you can see right here. So if you go to the search button right there on this particular point here, you can see the search for GBP USD. You see here Great British Pound Sterling versus the United States dollar. So now you come to the charts without any knowledge of the chart, anything, you don't have anything, you don't know anything, right? All you just want to know is what you're here for today to do. Do you understand? Now you want to come to the chart, and the same way people go to work Mondays, Tuesdays, Wednesdays, Thursdays, Fridays, do you understand? That same way you also want to do what? You also want to go to the chart and look at how the chart has behaved Monday, Tuesday, Wednesday, Thursday, Friday. That's the first thing you want to do. Do you understand? First thing you want to do is know how the chart has behaved over the period of time. Now, so let's just go straight to last week. We are currently streaming this video, we're shooting this video on a Friday. So we're going to go to the previous week, which was last week. Now, let's go ahead and take our vertical line and then go to last week, right? So we could see that this is last week here. So the market opened here on Monday, on Sunday midnight. Do you see that? The market opened there, and then we could see that we closed somewhere. Okay, this is not last week. This is last week here. This is the market opened here from last week. Can you see that? Now this is last week. Everything we did here is last week. Can you see that? Last week. Can you see that? So everything here happened last week, right? Now we are now in a new week. We now have the idea of everything that happened here. We now want to use it as a tool to make a decision here. Yes. Do you understand? Now good. So now we now zoom into the charts, and then we'll be like, okay, we have a decision here. Now first thing first is we want to mark the highest price the market got to, which is this point. You now want to mark the lowest price, or the lowest point price got to, which is this point. Now pay attention to what is happening here. This is very interesting. Last week, everything that happened throughout last week was these two things. Do you understand? The highest point price got to, then the lowest point. Now from what we can now see that everything is happening in a way that we now want to use this particular information to make a decision this week. Okay, now we now look at it, and then we wait for one of these two things. We want to wait to see if the highest point or the lowest point can have a retest. If we can see price do what, this is last week, price just came, blah blah blah. This is last week, then price came down, created the lowest point, then blah 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 blah. Then we started a new week. Do you see that? Then price started pushing. Let's imagine then price came back to this highest point, or price will come back to this lowest point. We just want to wait for one of these two things to happen. We just want to wait for price to come to this highest point, or price to come to this lowest point, before we make a decision or trade anything. You understand? Now that's what we're going to look at on the chart. Now we waited for price to just come, and then if you look at it, price came to the lowest point. Can you see that?
Yeah.
If you look at the price came to the lowest point. So if we have, this is the lowest point of the previous week, low of previous week. Look at it. LOPW means low of previous week. Okay. Now if we have HOPW, high of previous week. Can you see that? Good. Now so let's elongate this line, and then let's make it look, let's bring it into the new week. Okay. Now we have the new week here, and then all we are waiting for is just some sort of confirmation into that into the low, you understand, of the previous week. So now when I saw that price came down into that point of the previous week, can you see that? This is the lowest point price got to, then price came into it.
Yeah.
Then all of a sudden we saw this aggressive push to the upside, which then left us with what? A very, very good exhaustion point.
Yeah.
You see that?
Okay.
Now there are two ways at which you could trade this scenario, this situation. Now you could either wait for a retest back into the exhaustion point, and then price should push up,
yeah.
or you can wait for a breakout and a retest. Two ways you can, a breakout and a retest. Two ways at which you can trade this is this particular strategy, or this particular analogy I'm giving to you is wait for a confirmation, or a breakout and retest. Now this is a very important thing that you have to pay attention to. Now if you look at this, we could see that this particular exhaustion point is a confirmation that the buyers will actually in this particular point, the lowest point of the week, okay, the lowest price of the week, and then all of a sudden we could see that with this particular idea or this particular analogy of this exhaustion, we could decide that I will not be doing anything on GBP USD aside from buying during the week. Okay, now you see that you've decided on the bias. What is bias? Bias is, are you buying or selling? You understand? Your bias is showing, your bias tells you what direction you are interested in. Do you understand? So understanding these two can really help you when you know what direction you want to trade. So now you of course know that you want to buy, right? Because of this exhaustion, you can see the exhaustion, right? Then the next thing is you either want to go to the lower time frame, like the 1 hour, and then watch what really happened on that exhaustion. Now the exhaustion you saw on the 4-hour time frame is this particular candle, or this 3 candles. You understand?
Yes.
What story does this 3 candle tells me if I'm just looking at this chart? This is just that it already gives us a support level. Do you see that? Now if we decide that since we could see a very, very nice, we could see price coming back into it, and we buy off from this point, put our stop loss at 1 candlestick away, and then target 1:2. Okay, now we see that price got to this point, it broke out of the previous week low, the lowest price, then it came back inside with a very, very strong bullish engulfing. Good. Now then we bought off that point. Do you see that? Then we kept our stop loss slightly below that candlestick, right? That 1 hour candle, targeted 1:2. Okay, or we targeted this particular tiny exhaustion point here. Now you could see that looking at this now, one would see that price literally couldn't get to 1:2 before we saw an aggressive reversal. Now let's imagine that you didn't exit this trade. Okay, you didn't exit this trade and price takes you out. What will you do? What will you do? Now we already have a stop loss. Doesn't mean this strategy doesn't work. What it means is it is giving you an opportunity for another trade that can potentially give you a very good profit. Good. Now let's imagine now that this particular trade, we can see that we just lost 35 pips. It's nothing much on GBP USD. Okay, now if you enter with 0.01, it means you're just going to lose $3.5. Do you understand? Now you now decide that you want to wait for what happened. Why did you hit your stop loss? No problem, you waited, then you see or you saw that price did what? Price actually decided or is wanting to break out of that low of the previous week. Can you see? Now all these weeks here showed a breakout, but the fact that price came back inside, we cannot decide that it is a breakout and a retest yet. The only time we can decide that it's a breakout and a retest is when we have a situation like this. Do you see that? Now, so our support level right here has now converted to a what? A very good resistance. Because now we are no longer seeing price form this, we are now seeing it form this. Can you see? We already have a lower high. Do you see that?
Yeah.
This is a what? High. Do you understand? Now this high is lower than this high. So what does that really tell you? That tells you that, okay, fine, no problem. This tells me that what? I can easily go short here, put my stop loss slightly above here, and then target probably this point as my take profit, or somewhere around here as a take profit. Or you could target this exhaustion point. I like my exhaustion point so much, as a final take profit. Is it possible for price to get there? Very possible. Yes. If you sold here, get your stop loss slightly above this candlestick here, and then you target this exhaustion point.
Or,
do you understand? Or you could easily just go with 1:2 and then you are done. Now you've recovered the money you lost and you've also made more. And if this is the only two trades you took on GBP USD this week, it's good. If this is the only two trades you took on GBP USD. Now let's go ahead and break it down on a more simpler, or let's go ahead and back test it for more information, right? So now let's just delete all this. I don't know if you guys are following, right? Are you guys following now? So we have all this shit. Let's just remove 24 joints. Now good. So now let's go back time and then look at how GBP USD has respected this. Now this is a beginning of a new week. Let's look at this. This is Monday. Good. Now then, this is the Friday of that week. Okay, let's look at this. This is the Friday, Sunday, Friday. Good. So then we have a new week now.
Friday.
Okay, this is Friday, right?
21st.
Oh, okay. This is a good Sunday. Now, so we have this week. Then let's go ahead and go back to the previous week here. This is Sunday. Yeah. Then that is 1 week there. Then we can also go ahead and look at the previous Sunday. Yeah. Good. Now let's pay attention to this. Let's pay attention to this particular two. These two. Let's just connect these two, right? Now we decide that since I have this particular week here, and then I can mark out the highest point price got to. Can you see that? And I can mark out the lowest point price got to. Okay, for this week. Now we can now determine that we are waiting for price to come to one of these 2 points. True of us. Now we can now see that the next week that we have, we could see price tap into this particular, the highest point for the previous week. Okay, then so now we have a very good inverted hammerhead, and after which we have a very good bearish engulfing. Do you understand? Now we have that bearish engulfing, then we take our sell. You understand? We take our sell, putting our stop loss slightly above this point
very
here.
scary to take ourselves from here, but the fact that
From
because of this what's it called, the exhaustion point that was there,
yeah,
but we saw that it
filled it up. Do you understand? So we had a very complete and even more excess. We had excess of this exhaustion point that was filled up. Do you understand? So if we had 1:2 as our trade risk to reward, or 1:5, or whatever it is, we could just have a very good trade right there. Can you see? 1:2. Or if we were targeting exhaustion points, if we were targeting exhaustion point as our take profit, we could have one of these exhaustion points first target. Do you see that? Expecting price to fill it, and then we could also see that we are expecting this exhaustion point to also be filled. Do you see that?
So take profit.
So if you want to just do it 1 ratio 2, your take profit 1. The next exhaustion point your take profit 2. The next exhaustion point your take profit 3. Does that make sense?
Yes.
So you see, so this is just
you can have up to take profit.
You can have up to 3 take profit. Do you understand? Now this is just a very typical example. Now let's go away from this day. Let's go away from this week, yeah. Now someone will ask me, can we break this down into another week or another day? Yes. Can you break it down from weekly to daily? Yes. Can you break it down from daily to hourly? Yes. But before we go ahead, I'm just going to continue sharing this. Now we have a new week here, right? Now this new week that we have here,
it's formal we used to.
do you understand? Now we are going to use this particular previous information. This is the highest point price got to, right? I don't know, are you seeing how sweet this looks?
Yes.
This is the lowest point price got to.
Really good.
You have to stress it.
That's not the lowest point.
Good. That was not the lowest point. This is the lowest point. You seeing it? You seeing what is it? You can see it, right? Can you see it now? That's the lowest point. This is the lowest point because this is where the week started from, and then this was the lowest price we had. Do you see it? This is the lowest price. This place here. This is the lowest price here. Can you see that? This is the highest price. Now we are using this particular information for this week. Now good. So now we now have price tap into the lowest point. Can you see that?
Yes.
Then what happened? Aggressively. So if you waited or if you took your buy without, of course, if you're an aggressive trader that you don't want to wait for anybody, you just want to take your buy, put your stop loss slightly below.
What you said, you said you are trying to streamline it to have best possible position. This is still a very what's it called? It's still an exhaustion point.
Of course.
So you are still waiting for it
to be filled. Okay.
Alright. If you wait for it to fill, you can see that most likely most of the trades that we're not really
I'm trying to understand.
Can we say most of the trades this particular week we're not really confirmed enough?
Yeah, so let's look at it. This is an exhaustion point, right?
Yes.
Now it is one thing about exhaustion point, it is not a candlestick end inside that it is filled. It can be filled even by weeks. You understand? Now look at this, is an exhaustion point, have you?
Okay, you can now streamline it, narrow it down.
Do you see that? Good. Now we can see that price filled it with this week. That week filled it. So that week is filled. That one is filled. Now it's not until when the body is inside. You understand? You can easily wait. Now this is also another week that we could say there's an exhaustion point.
Yes.
Now this one price tapped into it, but price was unable to fill it to the lowest point. Then we could see a very nice bullish engulfing.
So you still feel it, but
do you understand? But not completely. So if we are to use this particular point, the lowest price, we could just have our stop loss slightly below this point. Look at this candle here, do you understand? Or this previous candle here, and then keep our stop loss here. This trade would have been a little bit more skeptical because for us to be able to take trades conveniently, we need certain level of confirmations.
Yes.
Do you understand?
Yes.
Now, so if I'm to use a level of confirmation from here, I could just say, based on the fact that we have a very good rejection, which gives us a particular one. This particular, what is this thing again? Exhaustion point. Good. Now we can now execute our position here. Do you see that? Putting our stop loss slightly below the exhaustion point. Can you see that? Can you see that? Now, where would you want to keep your take profit? You could keep your take profit at 1 ratio 2. Do you see that? Or you could keep your take profit at the end of the exhaustion point. Can you see the exhaustion point?
So please, I want to ask something.
Yeah.
Right. I'll take profits now. For instance, in this bullish market that we can see in this particular analysis, right? So we had our take profits 1, we had our take profit 2. So when we reach take profits 1, I want to understand what really happens.
So when
that we ask you if you want to.
Good question. So if you have your entry right here, and then you are targeting to get to this point,
yes,
it means you want to either have 3 entries. We'll still come back to risk management. Okay, so if you were to execute your trade with a 0.03 lot, 0.03 lot, rather than opening the 0.03 lot immediately here, you can open 0.1, 0.1, 0.1.
I get
0.1 first take profits, you put it at 1:2. Do you understand? 0.01, the second one, you put it at 1:3. Do you see that? Then the last take profit, you put it at the end of the exhaustion point. What does this tell you? When you have your take profit 1 smashed, every other position has to be on break even. What does break even means? You are moving your stop loss to the entry. That means you're not risking anything again.
Okay.
Do you understand? That means you're not risking anything again, because of course take profit 1 hits already. So for the fact that take profit 1 hits, it means if anything wants to happen, you shouldn't come back to your entry point.
Yes.
Do you understand?
So your next
entry, take your next, like if you wish to take another trade, of course this is a very nice trade to take, because of course this is the highest point price got to the previous week, and then we can see how price is reacting off this point. So if you had sold off this point here, which I would advise, because of course your stop loss will be very large. Look at this now, your stop loss is large, right? You could just easily wait, right? Just wait. You understand? Wait. Now if you look at this, you already had a very good buy off this point, from this particular point, right? This is your entry.
Yes.
You bought off to this point, your stop loss is slightly above this point, boom. There's 74 hours, so you see, and you can, if you want to swing, you can hold this trade. But one thing about this analysis is it develops your bias for the week. It tells you what do you want to do, what do you want to focus on. Are you focusing on selling, or you're focusing on buying? It tells you what you want to do. Do you understand? So this one here,
after taking this trade, and then you're out to this point, and then it's not coming down.
Exactly, you panic.
You panic, like
You panic. Do you understand? You panic. But the thing there is, as far as your stop loss is in check,
it's better that you take your profit up to here.
Yeah.
As long as you've taken out your first profit, automatically this place is now your next stop loss.
So that could be, or you could just keep your stop loss right on your entry point. If all your entries are here, do you understand? If all your entries are right here, now you longed here all the way from this point, all your entries are here, do you understand? Then your stop loss is here, right? Now then price, let's look at it. 1:2. Where's 1:2? Okay, this candlestick did not give us 1:2. This was the candle that gave us 1:2. You see that?
Yes.
This was the candle. Do you understand? Then price got there. Do you understand?
Then
it came down a little. Then it went back. Do you understand? Then it kept on going. 1:3. This year, after 1:3, just observe what the market is doing. 1:3.
Yes.
It came back again. So one thing about drawdowns is you have to be comfortable with seeing your money increase and decrease if you want to really trade. Very if you
so it's not like, oh, when it gets to this point immediately you change this to your stop loss.
No, don't do that. Just make sure your stop loss is just here, because price can come back to take care. All these things are just to take care. But you know that your entry point is a valid point for you for that entry. Not everywhere on the market is for entries. You understand? Based on this strategy now, you could see that this is a beginner friendly strategy that you don't have to stress about it. You don't have to trade every day. You don't have to trade every now and then. Just to make sure you're waiting for the high of the day or the low of the day to be broken, or price to test that particular point, which is like very interesting. So if we look at that, and then boom, you end the week and then you're out, you targeted this exhaustion point, fine and good. Do you understand? But let's now imagine that you now want to come again to the next day. Okay, the next day you want to use the information here to trade in this next day. So from this next day now, you can see that this particular point here is the highest point price got to, right? Now this point here is the lowest point price got to for that day. Can we see that?
Yeah, this one.
This is the highest point price got to,
yes,
for this previous day. Then this is the lowest point price got to for that previous day. Now you're using this particular day. Now you want to trade in this day. You want to trade on the Wednesday or the next week. I mean, now you're now trading. Then you now
that means actually this. I think this is a very let's say volatile week, in the sense that price actually got to the highest point of the previous one, and it got to the lowest
point of the previous. Do you understand? Now this week led to this. Now one thing, like I said, one thing you have to understand is every day leads to another day. It tells the story. So this week led to this. Do you understand? So the fact that price already tapped into the highest point of 2 days ago, and it has not really dished out the sale that's supposed to dished it out the second day. You see that? So if one was to use that particular analogy, right, or if one was to expect price to come back here, which looking at this particular chart pattern here, one would not want to expect that. Why do you think one would not want to expect that? Why do you think one would not want to expect this? Why? Now, why would you know? Why this is the highest point, right? Price got to the previous week. This is the lowest point. But why do you think you don't want to expect price to come back to this point?
You don't want to expect price to come back to this point.
To this, yeah, to the highest point. Why do you think you don't want to expect?
It hasn't like
gotten there.
It has gotten there.
It hasn't gotten there, yeah.
It hasn't gotten there.
Because of course it is. If price just tapped into the exhaustion. Can you see that exhaustion? Price just tapped into this exhaustion. Yeah. Can you see that? You see that? Price just tapped into the exhaustion.
We are trying to narrow down or streamline our trades. It can be very, very accurate. So saying that it didn't really fill up this exhaustion point.
Where do you see the end pattern? Yeah.
From this day.
This day, good. You have an end pattern here that gives you that confirmation. Okay. So now the reason why we would not want to expect this is because this previous day, which is like 2 days ago, price came back. Price got to the lowest point, then price came back to the highest point. Which on a normal day, we already know that whenever price comes to the highest point of the lowest point, we expect two things. Either price should repeat what it did, or there should be a breakout and a retest. Now look at it. Price tapped into it, then it sold off a little. All this sale doesn't guarantee that it has sold off what it is meant to have. Do you understand? Dropped for this previous day. So the fact that price now came here, then we can now see this bearish engulfing on the 4 hours. That gives us a confirmation that
it is not
going to. Do you understand? We don't have any reason for price to come back to this highest point. Of course, in the future we could have, but now we are just looking at what is more possible. We could hit stop loss, no problem. That is why we don't have too much risk. We just put our stop loss one candlestick away. Do you see that? And then we target what's the lowest point of the day, of the previous day. And then, or you could look back into some exhaustion points. Can you see this exhaustion point? The previous week, sorry, the previous week. You can see this is an exhaustion. So we could just target price coming back into this exhaustion or this particular exhaustion. Do you see that?
Yes.
And he did a very neat job. Do you understand? So it's crazy that these are just how this whole strategy works, and I want you guys to be able to understand how it works. So for gold, we broke it down already, and then we can see that right now gold is dipping as aggressive as it can, So look at this. The current trade we are on gold currently, we are currently on Friday. The market is closing in few hours. This is currently, what's the time right now? The time is 6:16. So we'll be ending this class soon, but we just want to break down how we caught this particular sell that we are on gold. So look at it. This was last week. This was the highest point price got to, and this was the lowest point price got to. Okay, now we can now see that price did not come to the lowest point at all. Price did not reach here. Do you understand? Price did not reach here at all. Do you understand? But price came to the highest point. Can you see that? Price came to the highest point of the previous week. So we had our sell limit waiting there.
Yes, I would say it filled up that exhaustion.
Yes, it filled it up. Do you see that? The week
even more than
do you understand? The week automatically filled it up, right? You can see the exhaustion point here. Or these two points here are good exhaustion point. You see that? So all these points here, price filled it up nicely. You see that? And then now, if all things are to go equal or to be equal, we will be targeting price coming back to fill this exhaustion point. It's very possible. Very possible for us. It's very possible. Do you understand? But
is this what you said that you're thinking we should hold? Okay.
Do you understand? So this is what we are thinking we should hold. But if we are to look at the overall, of course we cannot ignore our knowledge of chart pattern. Okay, you can see, we can see what would we call this?
A doji.
No, not the candlestick now, the structure. Yeah, lower high, higher low, or which of them? Or higher high, one of those things.
A change of what is it called? A change of character.
Okay, there's a change of character that happened here, right? Good. But this low here, what would we call this low? Is it a lower high, a lower high, or a higher low? You understand? A higher low. So, because of course this low is higher than this low. Do you understand? So, but this low is a lower low, because of course it is lower than this low. Do you see that? And this low is also lower than this low. Then this is a higher low. So based on this higher low now, it gives us the idea that what we could still see more higher low forming over time. So if I see any higher low forming, then I will want to close this trade.
Yes.
I will not just close manually because I'm scared. So like, I will wait for a confirmation.
This is like a change of
trend, of character itself. Do you understand? Showing that from, do you understand? We have a downtrend. Then now we can now see a change of character happened here, and then after that change of character happened, what do we see? We see a higher low. You see that?
So it's possible to see another higher low here.
You see that? So it's possible we could now see
tell us that
go up now. Might not even get here
to this point.
He's trying to go for an uptrend this time around. So we just close the trade.
So what if
hold on to making profit?
Yeah, while we are watching, why that lower low is formed. Now what we are doing is called something called counter trade or degen trade. So counter trade, because we are going against the trend. That's why the fact that now I told you that as a beginner, your trade should be the trend should be your friend. Yeah, but this is a professional trading. Whereby we are waiting for just that low to form, and then we expect to push to the upside. So all this now are just information that you need. So now if we look at it, which point do you think price want to reverse from? Based on candlesticks and exhaustion points, based on our knowledge on that, we could say that this particular exhaustion point will be where price will react from. So if we want to take profits, we want to see how price will react on this exhaustion point. That's an exhaustion point.
Yes.
It doesn't necessarily have to always be in a support level or a resistance level. It can always be somewhere. Price will still have to come back to fill.
Where we are holding, even if you can decide that, oh fine, it's a change of character that we're watching for, but most change of character that we're looking for, I think it will most likely come from this exhaustion point. Good. So I want to see how it reacts on this exhaustion point. Terminally, we are going to close while still on profit.
Yeah.
Yes.
So very, very simple thing, and then that's
so even from this point to this point, I can say for sure that
we've done 1:2 safe.
Yes.
We could have done 1:2.
But we can relax because all of this are even supporting our.
Do you understand? So
it's the only point that I can see
that we can see that is not supporting what we have. Do you understand? So based on that brings us to the end of today's class, guys. Alright guys, so thank you guys very much for being a part, and then if you've not subscribed, make sure you go ahead and subscribe. If you're new to this channel, make sure you've gone to the previous video, and thank you very much guys for sticking to this particular point with us. See you guys next week, and then always know that the chart is your friend. You can always make a lot of money from the chart, and then nothing is impossible on this chart. Peace guys. Alright, peace.